Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the ending diagonal scenario where we're looking for a 5-wave structure to the upside on the low time frame where wave 1, 2, 4 is already finished, and we are looking for a final 3-wave structure to the upside in a wave 5, which has to be a zigzag, because in an ending diagonal all of the waves have to be a zigzag structure, either simple, double or a triple zigzag, but in this wave 5 we are looking for a simple 535 to the upside. Now currently the most common target for your wave C is between the 1 to the 1.236 pulled from the low to the high of A to the current low we have here for B, giving you a target area between 39.2k and 39.7k. If we look at the target area for a wave 5, then we have to look between the 0.618 and the 1-to-1, giving you an area between 38.5k and 40.4k. And that is the invalidation, because a wave 5 is not allowed to be longer than a wave 3 in a contracting diagonal. Hence, it's not allowed to go above the 1-to-1 of this wave 3. We do have some additional resistance in this area as well. Of course, most notably the golden target box we've been talking about for a long time, 38.5 to 39k. Then we also have the blue box here, 39.3k to 39.7k, as some additional resistance. After wave 5 is in, we then expect price to retrace back towards the downside. In the most bullish scenario, this move over here is a wave 1 after a triangle correction is finished. This is your wave 2 and this is another 1, 2, and you expect big continuation to the upside. At the moment, a lower probability scenario, also considering the length of the range here, but mainly also the resistance that we have above price. This is quite strong resistance that we have, and if we're looking for a wave 3 to the upside, you're looking for a big pump where basically this should be nothing, as volume and price should increase rapidly to higher prices. A minimum target for wave 3 is usually the 1.618, which is sitting at 41.2k, and eventually after a 3 you expect a range in 4 and then a wave 5, finishing again a wave 5 and then a retracement to the downside. Now, an invalidated scenario that I do like to talk about, as I got a couple of screenshots about this scenario from people, probably from a video somewhere, but this scenario is not valid, where you have an A, then a triangle over here for in a wave B, and then a wave C to the upside. Following Elliott Wave rules, this is not a correct scenario. In a triangle, all of the waves, or 4 out of the 5 waves, have to be a zigzag structure, and if there's one wave not a zigzag, it's usually C or D in a double or triple zigzag, so it still respects the zigzag rules, and wave E can also be a triangle by itself. But that means that a wave A has to be a zigzag in an ABC, but this wave C then didn't take the low of this wave A, which invalidates a whole triangle to begin with. So this is not allowed. And then finally, wave D went above the high of wave B. That is also not allowed. The only wave that is allowed to go below or above the previous wave in a triangle is a wave B in a running triangle, where wave B can take the high of the origin of your wave A. So A, B, and then you want to see a C, D, and an E, where D is below the high of wave B. Going above the high of B is not allowed in a triangle, so this whole scenario is therefore simply invalidated. If we then go to the micro scenario over here and we zoom into this range, then I have 3 scenarios, right? I have the neutral one, which is basically a continuation of the range, one bearish, one bullish over here. Now this one is of course a complex one. We're then looking for a W over here, followed by an A, B, and then a wave C to the upside in a wave X, and then we're looking for a wave Y to the downside in a triangle or a flat scenario. Now if we zoom into this wave X over here, we are then looking here for a 3-wave structure in a wave A, then we have a 3-wave structure in a wave B, and then we're looking for a 5-wave move to the upside in a wave C, where your target area for wave C is between the 1.236 and the 1.618 at the top over here, which is between 38.2k and 38.5k. Now for a wave C in an expanding flat, if we then look at an A, B, C, most common target area is between the two 1.618s, which is between 38.4k and 38.6k, 5k. But of course this is very, very high to the high, right? We're almost taking the high if price decides to go that far. If we pull a Fibonacci from the high to the low of wave W, and we toggle on the 886, right, then you can see that the most common target area for your wave C is even above the 886, and closing candles above the 886 really increases probabilities to continue and take the high. So preferably in this scenario, you're not going to reach the most common target area for your wave C, which is between the two 1.618, and preferably price is reaching the less common target area for wave C between the 1.236 and the 1.38, or between the 1.38 and the first 1.618, where we do have the 786 and the 886 still as some additional resistance there. Now, after a wave C and therefore wave X, we are then looking for a move to the downside. The fibs that you see on the chart over here, the colorful fibs, are wave 4 targets for then a potential 1, 2, 3, 4, 5. If price moves to the downside and hits the 0.618, an impulse is invalidated, and we can either look for a continuation sideways for a wave Y triangle, or we can look for lower prices to come. But as long as this holds, there is the potential for a wave 4. This is the most common target for a wave 4 as well, the 0.382 to the 0.5, which is between 38.1k and 37.9k. The invalidation at 37.8k. Now, in the most bearish scenario, one can be looking for a diagonal. The problem is, however, and I do at least want to mention this diagonal, but it's not valid, because the problem is that this low here for wave 3 did not take the low of wave 1. So in a leading diagonal, the subdegree waves, your wave 1, 2, 3, 4, 5, right? Wave 1, 3, and 5 can both be an impulse or a zigzag. Wave 2 and wave 4 have to be a zigzag structure. So in this case, we have a leading diagonal where all the waves are then 3-wave structures. So we have over here your wave 1, your wave 2, your wave 3, your wave 4, and then you're actually looking for 5. Now, besides this wave 5 looking very much like a flat, which isn't allowed, the main issue is that wave 3 did not go below the low of wave 1 in a 1, 2, 3, 4, 5, and that is not allowed in a leading diagonal, really increasing the probabilities that price is still going to take this high, because this would be a 5-wave structure, and then a 1, 2, 3 to the downside, or an A, B, and then a wave C to the downside. Now we can of course move correctively to the downside in the scenario I just shown you, but not in a scenario where it's an A, B, C, or a 1, 2, 3 like this, because this scenario is not valid. If we then finally look at the bullish scenario, then we're looking at this structure over here as potentially a WXYXZ. It's very, very difficult to have this low as the low of this range, and now the beginning of a new impulse to the upside. The only kind of way it works is a WXYXZ, but the problem here is that in a wave W, Y, and Z, only one of these waves is allowed to be a zigzag. The others have to be other corrective structures. And here we have a zigzag in W, and notably, possibly here, another zigzag on a wave Y looking at this structure to the downside. But that would invalidate a WXY. Also, a WXYXZ. Also, a WXYXZ in general is an incredibly rare corrective structure, and therefore it's never preferred. Secondly, if this is the low of your wave Z and we are looking for an impulse to the upside, then what is interesting is that we have two times a bounce on the 886, and the 886 is a less common target for a wave 2, and it is more common for a wave B or a wave X. It is still a target for a wave 2, it's just less common, where probabilities usually increase that the move to the upside is part of a C or a wave Y. So over here you can see, taking a fib from the low to the high, the 886 is touched, and taking a fib from this low to the high here, the 886 is touched as well. Now, what would support a scenario continuation to the upside is that there are bullish divergences building constantly. So we have bullish divergences between this pivot and the higher lows over here. We also had bullish CVDs building over here at the same time. So you have the bigger bullish CVD divergence where your target is this high. Let me actually put this on the chart. We had the bigger bullish CVD divergence, higher low in price, lower low on the CVD, target is this high here. We also had bullish CVD over here, and the last one, bullish CVD over here. So let me show you how this looks on the CVD chart here. If I zoom out, then you can see that from this range, but also even this low over here, right? You can see the low on the yellow CVD here, right? The yellow line as we speak, by the way, is also below this low. So you still have bullish CVD divergences, but between these ranges here, these pivots, higher low on price, lower low on the CVD, that is a bullish CVD divergence where your target is that high. Now price moved to the downside here. Higher low in price, lower low on the CVD. More bullish CVD divergences, both on yellow here as well as on blue. And then finally, where price is right now, we have a higher low in price, but look on yellow again, lower low on the CVD between the red candles we have here and the higher low that price has created. So there is definitely a little bit of absorption going on of market short positions with limit long positions pushing price to the upside. So generally, if we then look at the probabilities of the different scenarios, then on the medium time frame, we are looking for this high to be taken. On the low time frame, we have the diagonal, which currently has the highest probability scenario on the low time frame, where we do expect a retracement to the downside relatively soon. So that diagonal is one to keep an eye on, with the target area as mentioned as well. And currently in this range over here, I never really enjoy going against CVD divergences, so I definitely keep an eye on what CVD is doing over here. But having this as the low for new impulse to the upside is a little bit doubtful, and that is why on the micro at the moment I would have the main micro scenario being the range scenario, where price is gonna have a high and continue ranging, looking for a triangle or potentially another flat in a wave Y, but actually continue the range for a bit longer. And then on position 2 would be very close behind the micro range. On position 2 would be a move to the upside, where we're actually going to take the high because of all the bullish CVD divergences, right? So that's definitely something I take with me. But in general, we are looking for this high to be taken, right? So the highest probability scenarios at the moment are long scenarios, of course, looking for upside, looking for continuation, bullish scenario or bullish CVD, more bullish CVD, price moving to the upside. We first want to see proof of resistance. We want to see something happening locally to then look for price moving to the downside. As long as that doesn't happen, it might just continue pumping and we look for this high to be taken. Who knows? Maybe today, maybe not today, right? So let's see how price is going to develop. I'll give you another update at 1 p.m. Central European Time. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.